Just wait outside for them.
Yeah, they should be outside when you get there.
Okay.
All right, friends, welcome to our team call. Katie's gonna give us some financial tips, and also I just wanted to give a shout out to Jordan for going Ruby today, which is so awesome. So exciting. You're so close to Diamond if you're at Ruby, so can't wait.
I'm excited.
I know. Katie, go ahead.
Okay, so a little bit of background. So when I graduated in accounting long time ago, years and years and years ago, but worked with taxes and stuff. And when my husband was graduating, I told him that year, I was like, we're done with education expenses. So we need to buy a house and have a baby because that's going to save us on our taxes. So that's kind of the mentality I want you to just think about. So I am kind of the cheap one of probably our team, probably. So I want to talk to you tonight about tax avoidance, not tax evasion, because we want to all pay Uncle Sam what he's due. So just kind of some tips and tricks of being a Beachbody coach and saving on taxes and doing that sort of thing. So we will be talking a little bit about Natalie Taylor, I think was the certified financial planner that was at Summit. She had some good tips. So I will be telling you a little bit about that. And then, yeah, so let's dig right in. So first of all, I was listening to this girl, and she asked this question, and I really loved it. She said, what is the biggest expense that you will pay in your lifetime? And most people think about that your home is going to be the biggest. Okay, I need you to go get that. Your home, your kids, maybe college education, lots of things like that. But really, when it all comes down to it, taxes is probably the most that you will ever pay because you pay them every year. So let's talk about how we can minimize our taxes and maximize our income, right? So first of all, Beachbody is awesome because they're tracking all of your income. And if you earn over $600 in a year, they will send you a 1099. So the great thing about that is you already have one number that you can just plug into your taxes, which is basically the income that you made throughout the year. If you make over $600, if you make less than that, then you probably need to track it, but you have that dollar amount. The thing that you don't have that Beachbody isn't going to give you is all of your expenses. So the great thing about being a small business owner is you can deduct pretty much everything. So you have marketing expenses, like, maybe you're doing some ads on social media, on Facebook or Instagram. You can deduct that. When you go to trainings like Super Saturdays or Summit, you can deduct all the expenses, the travel expenses, including hotel, airfare, all of that stuff. Meals are only 50%, but that's still amazing that you get to deduct that. If you have customer incentives, if you're running a free group or these challenge groups and you're sending customer incentives, for sure you can deduct those expenses. So tracking those is important. Also, the wear and share. So anything that you buy from Beachbody that has logos or anything on it can actually be a deduction. And it's great because then you post pictures of yourself in those items on Instagram or Facebook, and it's basically free advertising. So those are deductible. The one thing that's a little bit tricky, and I have talked to 2 of my CPA family members, friends about, is Shakeology. And really, one of them is in the ball camp of you can totally deduct it. It's a kind of a subscription. It's kind of like your monthly business fee type thing. You're trying to promote this product, so you can deduct it. And one of my other CPAs basically was like, no, you can't deduct it. It's a personal consumable item. So I will leave that up to you. I think either camp is fine. I think you just need to justify that cost. So if you are deducting it, for sure, you just want to, if you ever get audited, you just want to have your reasoning of why you are deducting that as whatever you're deducting it as. So if you're deducting it as a marketing expense, why do you feel like that is justifiable? So the other great thing is you can deduct a laptop or your cell phone bill or the home office. So the only exclusion about a home office, and this is tricky, I'll get to your questions at the end, but for sure, type questions and we'll have a Q&A at the end. So home office, if you have a designated space for a home office and you use it primarily for your business, then you can deduct a portion. So let's say you have like a 2,000 square foot home and your home office square footage is 200 feet. So it's basically 10% of your home. You can deduct 10% of all of your home expenses. So that would include mortgage, property tax, utilities, basically any expense to run your home. You can take that 10% or whatever percentage of the square foot of your office for, you can deduct that. So that's great, but the IRS really does want it to be like an exclusive office where the only thing you are doing is your business. So if it's a shared office, like mine, it's kind of our family office, so I don't really feel like I can deduct that, but I did buy a laptop for doing this business when I first started up, so I totally am deducting that and just catching the depreciation every year, which is great. Okay, so that's pretty much what you can claim on taxes. Oh, one more thing. When you are driving anywhere, like driving to the post office to send customer gifts out, or driving to Super Saturday, or driving to go park your car to go to Summit, or whatever, you can deduct mileage. So you just track how much mileage you have. The IRS will do 56.5 cents per mileage. You could also deduct a portion, kind of like we talked about with the home office. If you know the percentage that you use your vehicle for business expenses, so let's say it's 10%, like our home office example. So if you use your car for 10% of your business, then you can deduct 10% of all the expenses. So that would include, your oil changes, gas, car repairs, all that stuff. So in that scenario, it makes sense to, if you're driving like a Land Rover or something that's really expensive or pricey, you might want to try and do the percentage, because it will be better than taking the 56.5 cents per mileage. But if you're driving an economic vehicle like a Toyota Corolla or something that gets really good gas mileage, taking the percentage of the cost of the car might be less, if that makes sense. So there you go on that. And yeah, so do you guys have any questions? I told you this was going to be short. Anyone? I'm going to check the chat.
Yeah, I was going to say, I posted mine in the chat.
Okay. Yes, I totally think it's fine to justify Shakeology, because it is a required business expense if you want to be in Success Club or lots of different things. Okay. How do you track it? Okay. You put it all on Beachbody stuff. Last year I just went through those transactions and deducted from there. Yep. Yeah, you didn't think of mileage. So I kind of have a spreadsheet where I'm tracking expenses, and I'll save receipts, and periodically, like, I try to do it about once a quarter. I'm not great at it, but I'll try and go through and just make sure that I'm getting all the expenses and think about, the things that maybe I've forgotten, like, oh, we drove to Super Saturday. And even if you didn't track it the day that you drove it, you can still, like, put it in MapQuest and see, like, oh, that was 10 miles to go downtown or whatever, and plug that in to have, okay, I'm going to write off however much that is, $5 or whatever. So I don't think you necessarily have to have a receipt for everything. I think it is good in case you get audited, for sure. But if you have it in a spreadsheet and you can kind of prove with bank statements or credit cards or whatever, that's really good. And I loved how, so Jordan, do you have a card that's just primarily your Beachbody stuff that you charge stuff on?
Yeah. So one of the credit cards that we paid off finally, is like only so I shredded the card and I have it plugged into like my Beachbody accounts.
Yeah.
So that's how that one's being used. So like my business fee and Shakeology and Daily Sunshine and all that. And then my debit card is what I've been using for like clothes or, just other things that I can plug my number into. So I just have those two accounts.
Yeah, love that. So yeah, having like a separate bank account, like a business bank account or a business credit card where you're basically all of those expenses are Beachbody business, or, that definitely is helpful, because then you have statements, and those statements basically are just as good as a receipt in my mind, because you can, if you needed to, you could definitely call the hotel company and get a receipt or whatever. So one thing that I forgot to mention, Natalie Taylor, the certified financial planner that was at Summit, I loved how she kind of broke down that, so our income fluctuates, right? Like some weeks of the month we're going to have more or less, just depending on, customers, personal volume, all that stuff. So she basically said, kind of keep track of what do you need to take as a personal pay cut, or so keep all of this tracked in a business account, right? But then you'll want to transfer some back into your personal account to use for personal use, and you will probably want to save, she said, about 30%, 25 to 30% for taxes in another account, so it's separate, and that then you can pull from it when taxes come around. And then also 25% for goals and fun. So that could be reinvesting in your business. It could be, paying for Super Saturday, all that stuff. So she basically said, have an automatic contribution that comes out of your business account and basically puts the 25% into like a tax account that you're saving, and maybe the 50% into your personal account from what. And I think that you can, anyways, I don't really know how to do that when it's fluctuating, but if anyone has tips on that, I'd love to know. I don't remember what she said. So that's all I have for you guys. If anyone has any questions.
Natalie said to have a fixed amount, but I still just do a percentage. So I put 20% in taxes. I can't remember. I have a spreadsheet. So I leave 40% in my business account for business expenses, 20% for taxes, and then I pay myself 40%, my weekly paycheck. So I'm doing a percentage instead of a fixed. Maybe when my income continues to increase, I can make it as that amount. But for now, I feel safer doing it that way than saying, oh, I get $200 every week. Because, you know, if I get a paycheck where it's only $200, then I'm not paying any for my taxes or anything. So.
No, I totally agree with that. I think the percentage is for sure good until you get to a place where it is more consistent, you know. So, anyone else have any more questions? I hope that was good. So I would just say for sure track your expenses, have a separate account if you can. But the great thing is, like, you can deduct so much stuff because this is a business. And I have loved that my favorite part of this is I've had girls' trips that are paid for by my business and definitely help my taxes go down. So that's been awesome. So anyone have any other questions, or we can end it? Okay. Have a great night, ladies. So good to see your faces.
Thanks, Katie. I'll stop recording.